Welcome to my pencast for Accounting 2310. I have a goal today, and my last goal on this series of pencasts is to show you how to journalize transactions for the completed contract method of accounting for long-term contracts. Show how that looks in the general ledger and on the balance sheet, and do a little bit of a comparison between completed contract and percentage of completion. So let's get started. Since 2013 happens first, let's journalize those transactions. What you're going to notice is it's a bit boring because, with the exception of the entry to record profit, it's exactly the same as the percentage of completion method. Costs incurred during the year get tucked into construction in progress, an inventory account, accounts payable $2,400,000. They don't really say what happened to those, we'll assume. We do billings through the year. Accounts receivable goes up. We're passing on costs to our customer, letting them help finance us. Our third item under 2013. Crediting that contra inventory account, we've learned billings. Now I need to pick up the cash received from my customer, and that cash is $1,800,000, and I'll take that out of accounts receivable, $1,800,000. There is no entry under completed contract for profit, because we recognize it only at the end. So we'll go ahead and make our T accounts. We have accounts receivable. I'll make it a little bigger this time and they won't run out of room. Construction in progress. And billings, accounts that are of our interest to us. Post-construction in progress for $2,400,000. Post accounts receivable for $2 million, and post billings credit $2 million. Post our payments from our customers of $1,800,000. That's all we really need to post to see where we are. Our balance in accounts receivable is the same under either method. We are owed $200,000. In 2013, so on our balance sheet we have current assets, and we have accounts receivable, and it's $200,000 for 2013. Construction in progress includes $2,400,000, and billings are $2 million. A contra inventory account. Our costs in excess of billings is how it's written. I have room here. Costs in excess of billings is $400,000. If you compare this to our prior pencast, we have more money in our... Oops, hold on. Sorry, back now. So cost in excess of billings under the completed contract method is $400,000. Cost in excess of billings under the percentage of completion is $1 million. And the difference is the $600,000 profit that we picked up under the percentage of completion that hasn't happened yet under completed contract. Let's quickly do 2014. How about you put this pencast on pause and you journalize the transactions for 2014, and then come back and show me how you do. Check out my journal entries. How did they compare? Let's quickly post them. Into construction in progress goes $3,600,000, and notice it has no profit, just construction costs. Into accounts receivable goes our 4 million. That doesn't change under either method. That also goes into billings. Got those posted. And now accounts receivable also goes down for payments. So where are we at the end of this year? The accounts receivable has not changed. The accounts receivable has 200,000 plus 4 million, 4,200,000 minus 3,600,000, and that totals 600,000 in accounts receivable. In billings, we just have our total costs, which at this point in time is 6 million. There's no profit in there. And in billings, we have 6 million. Go ahead, put this on pause, and quickly make the journal entries for 2015. How'd you do? Check them out. Let's quickly post them. Hoping I don't run out of battery before this ends. It looks like it might. 2,200,000 construction in progress. Accounts receivable goes up for 4 million. Billings goes up by 4 million. And cash, you pick up your accounts receivable, 4,600,000. Let's total our balance sheet accounts. At this point in time, we have no accounts receivable. We have 8,200,000 in construction in progress, and in billings, we have 10 million. Well, we've now completed the contract, but we haven't recognized any revenue. So if you go back to my first pencast and look at the completed contract entry, you'll notice we pick up into construction in progress 1,800,000, our total gross profit. We pick up our cost of construction of 8,200,000, and we pick up revenue of 10 million. This puts all income statement amounts in 2015, revenue being 10 million, not spread out over 3 years, but just in 1 year. Cost of construction, 8,200,000, not being spread out over 3 years, but all in 1 year. And gross profit, 1,800,000, all picked up in 2015. There's one thing you have left to do, and that is make a journal entry. Let's go ahead and post this, 1,800,000. And the journal entry is to close out construction in progress and billings against each other. Billings needs to be closed against construction in progress. Construction in progress needs to be closed against billing. And if you look at our example, when you post these two, it takes everything to 0. The only difference in the balance sheet amounts along the way between completed contract and percentage of completion is that there is no profit recognized in construction in progress under completed contract along the way, and in percentage of completion, it's added in every year. Thanks a bunch for joining me. I hope this helps clear up long-term construction accounting. We'll see you soon.